Brian, welcome to the People's Matter show. This is Miguel Narvaez. I'm so happy that you could join us. I know that you're a busy guy and you're a celebrity among loan officers, by the way.
I don't know about that.
My partner, Jason Madiedo, and myself, we were talking about you. I mean, what an amazing journey you have had. I also got the opportunity to see some of the podcasts that you've done in the past. Very interesting. You are not only been in the industry for over 30 years, I think it's 35, something like that. But your story was very unique, how you started as a loan officer. This show is not necessarily about the mortgage business, but we'll talk about the mortgage. We'll talk about people. We'll talk about you, obviously, and especially about your story. But if you can just give us a little bit more about your background. I know a little bit about you. You started as a loan officer back in 91. Now you are the co-founder for Finlocker, president and CEO. You obviously, one of your passions is about, in your current role, is about helping loan officers to nurture the consumer from the point of thought to get them ready to the point of sale, which is very unique. I think it's a great technology. But why don't you tell us more about your background and what are you doing now?
Yeah, I love that. And by the way, I love the title of the podcast, People Matters. That's an awesome title for a show.
Thank you.
So yeah, as you mentioned, Miguel, I originated my first mortgage loan in 1991. I didn't originate a lot of loans and I didn't directly originate for a lot of years. I was very fortunate to start in the business when mortgage interest rates were, around 10, 11%. And those were falling from 12, 14, 16% in prior years. And so in my first 12 months of being in mortgage banking, the par interest rate went from 10.5 to like 8% within a year. And so that opened up this massive refinance opportunity. When I started in the business, I worked for a large mortgage servicing company. And so our origination role at the time was in what today is effectively called servicing retention, but we were essentially refinancing, helping people lower their payments who were already customers of our company. And for the first 90 days in the job, I was part of a 6-person team. And we went from 6 to 60, in 6 months because the rates dropped so fast. So I share that to say I did originate loans, but I quickly moved into, production management and then spent the majority of my mortgage industry career in a leadership role, always on the revenue producing side, the sales side, the production side, both on the direct retail side, dealing with consumers directly, but also on the indirect side through third-party originations, where most recently I was at Flagstar Bank and I ran the third-party business there where we acquired loans from other originators like Jason's company and others.
Right. So when you decided to start, I believe there's a few founders of Finlocker, and with your experience, obviously, it seems that you have vast experience on the consumer side. How did everything start? There's a problem and people are trying to find solutions. What was exactly the problem that you were trying to solve when you and the co-founders found this technology or developed the technology?
Yeah, so I'll say this. I'm not one of the co-founders, although I think I have earned co-founder status based on the last 6 years in this business because we kind of restarted the business once I came on board. The original solution of Finlocker was to help mortgage loan processors and underwriters streamline their analysis of a consumer's assets, their bank accounts, their bank statements, right? So if you think traditionally, a consumer would be asked to submit 2 to 3 months of bank statements, 12 pages each. And then the loan processor and underwriter would sift through those bank statements and verify that consumer has enough of their own money for the down payment and closing costs of the transaction, right? And part of that analysis involved understanding if there was any other extraordinary deposits made in the consumer's account that maybe wasn't their money, came from some other source. And so Finlocker, the original use case was really around having a processor or underwriter invite that borrower into this technology where that borrower created their personal financial locker, thus Finlocker. And in that financial locker, the consumer would credential into their bank account or bank accounts if they had multiple, that was where their down payment was coming from, and securely share access to the transactional data with their processor and underwriter. So this would have been, 2017-ish into 18. A couple big headwinds for the company at the time where consumers really weren't ready to give access to their bank account to a third party. And then, frankly, loan processors and underwriters felt a little threatened by the technology that, hey, this is going to accelerate my demise, right? Which, those of us that are in the industry can go back to like when the first desktop underwriter application was put out there. Underwriters thought that was going to be the end of the world for underwriters. It didn't change the number of underwriters. It actually just accelerated their ability to touch more loans. And so the basis of what we do today, which I'll come back to, was this concept of this consumer financial locker. And so when I got involved, the conversation shifted from using that concept in the middle of the loan manufacturing process and change it to building on this infrastructure to create a consumer-facing, holistic financial fitness experience that leads to certainty for the consumer and ultimately mortgage readiness. And so fast forward to today, our product, fully matured, if you will, is really serving mortgage companies and their loan officers to help loan officers reach, assist, engage, and nurture early journey first-time home buyers, right? And so just to kind of think about what loan officers traditionally have done is they waited for a consumer to raise their hand and say, I'm ready to apply, typically through an introduction from a real estate agent. And what our product allows loan officers to do and think differently or rethink everything is we allow the loan officer to leverage technology to go up the funnel and start building relationships with consumers early in their financial life, especially those that are, potentially thinking about starting that process of getting ready. Thus the point you brought up that, engage at the point of thought versus the point of sale. And we coach loan officers on doing that through financial education, financial literacy, taking a lot of, decades in some cases of expertise that these loan officers have and using it to truly help people get to a place of readiness with confidence and certainty. But this is the long game, right? This isn't a 90-day transaction. This is a 6, 12, 18-month nurture relationship. And so our technology really helps loan officers scale their ability to do that.
Yeah. The incubation is always been a myth. And I say a myth because we all know that top producers in the US normally have a great system for incubation, a great CRM, but not just the CRM. They truly follow with the CRM. And what you guys have came up is something even to the next level of a CRM to be able to have someone connected to the loan officer. Now, let's go into the human part of it, the human element of our business, the mortgage side of it. What do you think, with your experience, with the technology that you have as a business, what do you think is the biggest mistake loan officers are doing today?
Oh, man, that's a good question. I think the biggest mistake that any loan officer can make is leading with rate. The minute you lead with rate or price, you've just devalued your value as a resource to that consumer. And so I think, that I still see that happen often. Where it doesn't happen, Miguel, and this, is those top producers, the top 1%. They talk about rate when it's time to talk about rate. And that's after they've already built trust, built a relationship, built the rapport. created value for that prospective home buyer. Now, I'm not saying rate's not important, because it is, but there's value that you provide as a loan officer up early in a consumer's process that's worth an eighth, maybe a quarter in rate. And I still see the maybe newer, inexperienced, or the lower producers, that's the crutch they fall on is rate and price, and it just sets you up to be shopped at every turn of the transaction.
Yeah, totally agree. Totally agree. By the way, congrats on that book that you just showed us. Rethink everything you know about being the next generation loan officer. Obviously, technology has evolved very fast in the last few years. What is the piece of technology that you would tell a loan officer, you can miss anything but this one?
Well, of course, Finlocker, but no.
Why
I
not?
think I would probably say the CRM is the single most important piece of technology for a mortgage professional, because your database is everything as a loan officer, right? And if there's still a lot of loan officers that use like Excel spreadsheets as their CRM, right? Or worse, they don't
Yeah,
do anything.
or nothing. Yeah.
Yeah. So I think the CRM is, at its core, probably the single most important piece of technology for a mortgage professional that plans on making this a career. And I say that because everybody you talk to as a loan officer, whether you actually do a transaction or not, is potentially next year's customer or today's referral partner that could lead to today's customer. And if you don't have a smart way to organize that database and engage that database, then you're wasting every conversation you have. So I think the CRM is the most important. I know people say, what about the point of sale and the loan origination system? The point of sale, that's after the fact. When someone clicks that link to start the process as a consumer and go into your point of sale, you've already earned the right for them to do that. And so I think that's like become table stakes, that part of the technology. And so for a mortgage professional, I would be most focused on those tools that are going to help me engage better at the top of the funnel and stay connected with my database in a meaningful way that's going to add value to the recipient that comes out of this CRM, my past clients and or prospects, but also really help me grow my business.
Agree. And I've seen it over and over. Back in my days, I used to be a loan officer doing about 400, 500 transactions a year. And I was not at the top like there was people at the time doing 1,000 transactions a year. And I was about in the 1%, but always like in the 30, 40 in the country. But I always said it to myself, it is about who masters the CRM better to follow up with people. And I agree with you 100%. Now, technology has evolved, and now CRMs are, evolving and integrating with social media. But the human element, and again, this is a show about people. When do you think that the loan officer should rely on loan officer assistance to really work or to follow with that CRM and work on that CRM? What type of advice do you give loan officers in regards to the CRM technology in general to produce more leads? When do you hand out that to someone?
Yeah, I think it depends on, each loan officer's has a unique process for themselves and their team, if they have a team. And it could vary depending on their business model, how they acquire the customer in the first place. What's been really interesting to watch in the last, 12 to 18 months is this growth of loan officers showing up on social media as educators, or finfluencers. I've heard the term finfluencers. And so in effect, that loan officer is really becoming the brand, right? They're the brand based on the following their audience on these social platforms. And so I think what I enjoyed watching is loan officers that have leaned into that brand building, starting with consumer financial education and really putting out, very really good content that's meaningful. It's valuable. Some of it do it in a an edutainment kind of way. Others are more matter of factual, depending on their audience. But what I've seen most successful is when that loan officer bifurcates the brand building, brand awareness, kind of client prospect acquisition with loan manufacturing, right? And so I think that's where, to me, a good team behind that brand takes on the loan manufacturing process, right? So if I'm the brand on TikTok or Instagram or YouTube, wherever I'm educating at scale, I'm going to talk about the fact that I have a team that's going to make this the best process for you, right? And so that's one way where I think the loan officer assistant, the team concept is being successful. In that same regard, if you're effective, let's just bring Finlocker into the equation for a minute. If a financial influencer loan officer is using Finlocker or a brand of Finlocker, maybe it's their own brand, as part of their education strategy, where they, I talk about education, tends to be in the form of I'm either teaching you something or you're reading something, and then our product, the Finlocker product, becomes the way that as a consumer you put the teachings into action, and so it's like education becomes experience in our technology. And so what happens there is you've got, as a loan officer that's doing any kind of scaled social media content, you now may have hundreds or even thousands of consumers who are downloading your version of our technology, and there's a whole lot of data that's coming out of the consumer's engagement in the technology that a single person, a loan officer on their own, would not be able to keep up with. And so that's another place where understanding how to leverage technology platforms, in this case the Finlocker technology and the CRM, to create tasks for a loan officer assistant to have meaningful follow-ups with this early journey first-time home buyer who maybe is not ready to apply, but maybe they're getting to the within 6 months, within 4 months. So there is a need for a timely engagement and timely follow-up. I think loan officers need to evaluate their tech stack in two buckets. The bucket that typically the lender with the company they work for is going to own, which is the point of sale through loan manufacturing process, and then that up funnel bucket. And then I think they should think about themselves as the business owner, right? And then their team and the technology that supports their team from on an up funnel basis. You don't need more technology. You just need technology that works well together with whatever your core piece is. So that CRM in this case.
I agree. I think that you touch in a few things about the loan officer and the adoption of technology and the integration of a team and follow up. I mean, you nailed it on a lot of points that makes a difference. But in your opinion, and obviously the book says it all, you need to be prepared for the next generation as a loan officer. What is the one thing that you will tell a loan officer? Hey, don't forget about this. What is the number one thing? And obviously, we're talking about incubation. We're talking about your technology, which is basically doing such. What is the one thing that you will tell loan officers? Don't forget about X.
Yeah, you'll hear this concept, right? Hybrid loan officer. I didn't make that up, but I use it a lot. And what does it mean? For a long time we had the distributed retail loan officer, and then you had the consumer direct loan officer, which we've heard them called all kinds of different things, right? Call center, whatever. I believe that the loan officer of the future is a hybrid loan officer. And what do I mean by that? Today, the traditional loan officer probably still is 80+% reliant on referrals from a realtor, real estate professional partner. I don't advocate that ever goes away. What I advocate is that every loan officer find a way to go from 80% reliant on that source of business to 50, 40, 20, and maybe flip it so that maybe 5 years from now, 20% of my business comes from realtor referrals, which, by the way, could still be about the same volume I get today. but 80% of my business is coming from my personal brand that I've put out there, whether it's social or however I put myself out there as a personal professional with expertise in home buying and financing. And so that's what I would really, I talk about it a lot. Every time I have an opportunity like this, you're going to hear me talk about this hybrid loan officer that leads with education, that's willing to be in a consumer's financial life for 6, 12, 18 months before there's a transaction to be had, because that's where the race is right now. The race in the industry is to get to the consumer first, and to get to the consumer and be valuable in the consumer's life as early as possible, right? It's why when we watch the Super Bowl this year, you're going to see some big brands talk about, they're pointing their ads. They paid 7 to 8 million for these 30-second ads, and they're all about acquiring the consumer into their ecosystem before there's a transaction to be had.
Hey, Brian, I think that's a great perspective. I love the idea of a hybrid, especially to not depend. I never depend on realtors. I love realtor relationships and I love
Absolutely.
partnerships, but what you just point out is so crucial for the future of any loan officer on not depending on realtors. And especially when you have a consumer base and you have a refi coming at one point, you take advantage of those things. Now, a lot of people might say, Brian, you know what? It's not fair because I don't have any money. I don't have money to invest. How can you tell someone? How would be, for example, Brian, let's assume that you're a loan officer. What, and you don't have resources because you're a new loan officer. What would be the day of a work day for you? What would it look like that day for you as a loan officer? What would you suggest a new loan officer to do throughout a 10-hour day or 8-hour day?
Well, yeah, great question. So I think I would always suggest that it starts that before you even clock in, so to speak, as a new loan officer, why are you in this business? What is your why? What is it that you as a new loan officer in this industry are going to bring to the market that's going to compel either a realtor or some other financial professional to refer their clients to you? That's one. Two, what is it about you, new loan officer, that's going to be interesting, compelling, and that's going to produce trust in a consumer to trust and do business with you, right? So I think it has to start with the why I'm here as a loan officer. Why am I doing what I'm doing? Why do I want to be in this business, right? And a lot of that tends to depend on the institution that I'm coming into as a new loan officer, right? So if I'm coming into if I'm hired as a loan officer in a mortgage servicing retention operation, then I need to be the best technical mortgage loan manufacturer that I can be, right? Which means I need to understand the entire loan process, guidelines, products, blah, 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 blah. I'm not saying I don't think that's less important for any other loan officer, but in the servicing retention kind of use case where you're reacting to inbound activity, you just need to be the best at those tasks around loan manufacturing. On the flip side, if you're hiring in and you're really gutsy, and you're saying, I want to be a loan officer, a distributed retail, boots on the ground loan officer, and maybe I'm coming in under a top producer at a company, and I'm going to be a loan officer assistant or something like that to begin with, or a junior loan officer. The technical skills of originating a loan are still very important, but now I have to have a different skill set, and that skill set involves client acquisition. What do I bring to the table? What is it about me that's going to attract these referral partners or consumers to me? So I have to be my own kind of business development personality, if you will. So I think it all starts with who you are, what your why is, and then where you're starting from in terms of the type of organization. But let's just assume, for argument's sake, that you're starting as a loan officer, the boots on the ground, going to serve the community, serve realtors and other referral partners, but also create a personal brand in the community. Miguel, this is one of the challenges that our industry has, is the way we compensate loan officers. They only eat what they kill. So tomorrow's dinner is reliant on today's closing, right?
Well,
And that creates a lot of conflict in somebody's schedule, especially when you're just getting started or when you're struggling to close a couple of loans a month. It's hard to focus on nurturing a pipeline when I've got rent to pay or a car payment, due. So I think you have to be very disciplined around your day. And so if you're new in the business, the most of your day is going to be on prospecting because you don't have business coming in the door. And so, maybe 80% of your day has to be on active prospecting, which could look a bunch of different ways. It's calling on, getting realtor appointments, but it's also, I think every loan officer that enters the business needs to focus some part of their attention on their personal brand and who they are in the community and start to build that brand so that consumers are finding them as well. And so I would say 20, 30% of your time needs to be on supporting your personal brand, whether it's doing things like we're doing, showing up digitally on a podcast or doing your own podcast or putting social media content out. I think that needs to be a significant part of the time. As you start building an active loan pipeline where the tasks of originating loans starts to come into play, then, things are going to vary a little bit. But I think you just have to be disciplined about carving out fixed prospect time and just stay focused to that, because the work you put in today prospecting is what's going to put a loan in your pipeline tomorrow. And as soon as you stop prospecting, you're going to see that immediately impact your pipeline and tomorrow's closings.
Yeah, I agree. Let's talk more on a personal level, Brian. I mean, you have a very interesting career, very successful, starting from a loan officer, assistant loan officer, building a team of 60 people, then obviously getting different executive positions to now as a president of great technology in the mortgage industry. Now, let's learn what is the number one thing that you can remember that mistake that you at a personal level did, because we all make mistakes, we all know. So, and what is that one mistake that you did throughout your career that hit you?
I mean, I made tons of mistakes, so finding one is going to be a little bit of a challenge. Here's what I would maybe say differently is, what did I not do sooner that I regret the most today?
Okay.
And that's doing what I've been doing for the last 2+ years on LinkedIn, building a personal brand separate from the company I work for.
The company, yeah.
And so now, 15 years ago, that wasn't even an option, at least not digitally, but there was probably other ways I could have been doing that. I think I would encourage anybody that's in a, revenue producing role, whether it's in mortgage or outside of mortgage, to really focus some, if not most of your efforts on your personal brand. Because the reality is people rarely buy from brands or companies, especially in the financial services space. They buy from people. They buy from people that they like, know, and trust. And if your income is reliant on sales and closing sales, again, regardless of the industry, the product, and people don't know you, people don't like you, or people don't trust you, good luck selling anything. Good luck selling shoes. And so I think, our world today with these tools, podcasts, and obviously social, and it creates an unbelievable way for anybody to scale their brand, their personal brand. And this is the other thing. The other side of it is, well, what about my company? They won't like that. Look at, and I tell loan officers this all the time. If you're at a company that won't support your personal brand, you're at the wrong company, because there might only be one, maybe two logos in the mortgage industry that consumers, quote unquote, buy from. Every other logo doesn't matter. It's the individual loan officer that's important to that consumer. And I think the smart C-suite executives are realizing that and finding ways to support the personal brand growth of their team versus kind of push back on it.
That's a great advice. I mean, and I appreciate the honesty, the fact that creating your own brand. And I think that it's something that I always tell my people that I've been working with as well. The brand, your value is going to be your brand, who you are. And I seen you talking about that before as well. So I appreciate that honesty, Brian. Now, let's start who is your role model? Who's
Oh
the person
man,
that you
um,
admire the most? Business.
yeah. I've been influenced by a ton of people in business, and both positively and negatively. Like we've all been in situations where we've had that the not so great, bosses or leadership, and I always took even those experiences as learning opportunities. So, couple people outside of the business that are still very highly influential for me. My mom, she was a grinder early on, had 3 kids before she was 19, and had to do all kinds of things to support her family. So, there's a lot of work ethic that comes from just growing up that way. And then my grandfather he loved to work, and he retired young, like in his 50s, but he was always doing stuff, right? So like just a guy that would just get after it. And so I pride myself on loving to work, whatever that is. If I'm working in my garden in the summer, I just, I'm a roll up your sleeves, stick your hand in the mud and get dirty kind of guy. So, the work ethic, I think, is definitely, it's not genetic, but it's from the family, if you will. And then there was like some early mentors for me. There was one individual, Rick Mangone. He's still in the business. He always struck me like he was probably only 5 or 6 years older than me, maybe a little bit older, but I always looked at him as the most dynamic, engaging sales professionals, right? And so I went to work for him in the mid 90s. And that's where I really learned the importance and value of relationship, and both internal to your company, but external to the customer. And so I give Rick a lot of credit for that.
Is he in the mortgage industry?
He's a wholesale account executive in Washington State today. He and I were teammates. I worked for him at Source One Mortgage back in the mid 90s. But there's just things that I saw him do and how he treated people that still are paramount to how I think about, the importance of business relationships and personal relationships, frankly.
Yeah. So we're running out of time, but I think your journey, one of the things, obviously, with your experience now, over 30 years of experience, if you would have yourself 30 years ago, a young kid, hustling and learning throughout, just beginning basically 30 years ago, what would you tell that kid if you were see him today in front of you? What would you tell that kid that you have now with the value of knowledge that you have? What would you tell that kid in front of you?
I would, I would probably go back to my college kid and say, have fun, but have less fun and just learn. Be better at learning. And it's not about grade point, right? It's more about the process of learning. Be a better learner. I think that was something that I wasn't great at, definitely in college and early in my career. And I think there's so much value in knowing how to learn. And it's not always what you learn, but it's knowing how to learn, because a great example is this stuff I do on LinkedIn. When I came to this fintech startup, I had to almost reinvent my persona, right? And so I've become a student of, the technology, the social media platforms, but I know more about loan origination and loan officers today than I knew when I was directly in that space responsible for that business. And so I think probably the number one thing would be to anybody is just be the best learner you can be. And then fail fast, which means execute. At some
Yeah.
point you can plan, but if you're not executing, what good is it? You gotta be able to execute and move fast.
Yeah. That's great. Great advice. And I appreciate that. Brian, President and COO of Finlocker. I appreciate the time, your knowledge, all the advice for the loan officers and to all the people out there that are trying to build a business. One last thing, I mean, obviously, I don't know if you know about GDL Connect, a new business that we started about a year ago, helping companies to reduce costs. And one of the things that we're doing, talking about loan officers, is we're helping a lot of loan officers to create that team around them at a very unique, at a very low cost. People that we have a staffing company based out of Mexico, and we hire young talent, very young individuals that are helping loan officers to, to follow up with their social media, all that stuff to
Yeah.
incubate, to follow up with leads, and doing a great job for loan officers that are looking to grow their business. So I think that going to your point of building incubation, using the CRM and all that stuff, I think that those were really good advice for everyone out there. And I appreciate you coming today, Brian, especially, I mean, your time is valuable, and I appreciate the fact that you're here today.
Well, I enjoyed the conversation. I appreciate the opportunity, and I'm excited to learn more about GDL and what you all are doing, because it feels like there's some synergies between what we do here and what you all are up to. So looking forward to getting to know you much better.
Of course. So this is the show People Matter. This is about people, leaders, and I appreciate the time for everyone watching us today. Thank you.